David Nicholas with me now. David, September, historically a bad month for the market. So tell me where I can put my money to avoid that nasty trend.
Yeah, we all know September is historically a bad month for the market. S&P is actually negative going back to 1945. I think this is the perfect moment for utilities to shine. I mean, utilities have an awful year. They're down 11% for the year. But if you look at second quarter earnings, they had the third highest earnings beat, 9.9% compared to 7.9% for the S&P 500. And also, this was a pretty warm summer. That means higher energy costs. So I think utilities is a great place for investors to hide out over the next few months.
Well, hold on a second. I would go into a utility because I want the dividend yield. Should I go into a utility this time around for a capital gain?
So take a company like Southern Company. They're right here in Georgia. Yeah, they're paying 4%. They're mainly for income. But if you look at a company like NEE, Next Energy, that is a smart play on green energy. They have a much lower dividend, about 2.8%. That's a utility name where I think you're going to get some upside growth and not as much dividend, but you're really buying it for the growth. So it just depends on the company, Stuart. Southern Company for income, NEE if you want some upside appreciation.
Trouble is, he's still competing with, what, 5% on a 1-year or 6-month treasury.
Yeah, Stuart, that's right. If you take treasuries at 5.5%, I'll get a plug here. So our treasury ETF, FIAX, it's long treasuries, so you get 6.5% yield. But here's what's interesting. We actually have a long credit spread on XLU, which is the utility sector. So you can benefit if utility sector goes higher, but you still get 6% of the treasury. So you get a little bit of mix of both worlds, Stuart.
Well, hold on a second. How do you get 6.5% yield in long-term treasuries?
That's right. So we're doing a conservative options overlay. Most people think of options as aggressive. We're doing credit spread, so it limits your gain, limits your losses, so you're getting about a 1% extra over and above the Treasury, Stuart.
How long am I going to get a 6.5% yield on your Treasury fund?
So we're keeping it short term because if you think inflation is going higher, which I do, you want to stay on the shorter end of the curve. We'll go longer, but right now we're staying short, Stuart.
All right, we hear you. David Nicholas, thanks very much for being here. I'm going to watch that 6.5% yield on your long-term treasury. That's not a bad yield there, lad. All right, thanks very much.